Gentlemen, this will be exciting. Thank you all for being here. So just start with some quick introductions. I'm Wyatt O'Rourke. I'm the founder of Basilic Financial. We're a Bitcoin-focused wealth management firm, author of the Bitcoinization of Finance, do some work in digital credit.
Matthew Mežinskis, for One-Based Money, you can find me on any platform. Publish the monetary base every quarter, tracking the central bank money supply comparable to Bitcoin, and also been following Bitcoin as a power curve almost as long as Giovanni, but not quite.
I'm Paul Buitink. I've been a Bitcoiner since late 2012, and I'm also co-owner and managing director of Holland Gold, which is the biggest precious metals company in the Benelux. We sell like 500 million this year of precious metals, and we're enjoying the bull run.
Yes, hello everybody. Willem, Middlekoop, author of The Big Reset, The War on Gold and the Financial Endgame. I wrote The Big Reset in 2013 and coined Bitcoin virtual gold. Quite proud of that. But I was stupid enough not to buy any Bitcoin in 2013. But I corrected that mistake in 2018. So I'm a Bitcoiner now as well. And a gold bug.
From the United States, really been enjoying my time here in the Netherlands and in Amsterdam. We came in a little early doing all the tourist stuff, and all these Dutch folks are keep talking about the golden era of the Netherlands, and very very industrious history. And as I'm learning these things, the East Indian Trading Company, and then they're bringing in all these raw materials and they're processing in the sands, and then they're getting shipped to warehouses in Amsterdam. Then these finished products are going to market to the rest of Europe. And I kind of have this working theory that a society is most prosperous when the money is most sound. And Paul, you're a proud Dutchman. You have a lot of experience and in sound money, specifically precious metals and Bitcoin. How do we get back to the golden era of the Netherlands?
Yeah, so in the 17th century, we had the Amsterdamse Wisselbank, the Amsterdam Exchange Bank, and it was a full reserve bank where merchants and people would store their gold, and that would function as the main currency in Europe, at least the sound money. And that was very instrumental to the success of the Netherlands. And at some point, they started loaning out the money, and then the VOC, the trade company, they basically forced the city of Amsterdam to provide them more loans, and they stopped using the full reserve model and became a fractional reserve bank. And then in the 18th century, they basically went broke. So I would love to go back to that time, and I'm very much in favor of sound money. And I think in order to get there, you would need to have a free market of money first. And that's the main problem currently, is that we are forced to use the euro, and I would like to see, well, first of all, I think the Netherlands should leave the euro. I'm quite outspoken about that. But I would like to see a new system here where people can have more choice. And then we'll see Bitcoin, gold, other alternatives. They could then compete, and the best, the ones will thrive and be used by the public.
Yeah, that makes a ton of sense to me. Not surprised, fractional reserve banking is at the bottom of this. Willem, you're similar position. What do you think?
Well, I'm an old boomer. I'm 63 now. I've been studying the history and the monetary cycle since the late 90s. I became convinced in the late 90s that this is a house of cards, of fiat money, and dedicated most of my professional life since then to precious metals. Bitcoin wasn't around at that time. For the last 25 years, people in our industry, the gold bugs, have been warning about the financial endgame, warning about a coming crisis, which actually arrived in 2007, 2008. And now Bitcoin has taken over this story in the last 15 years, and Bitcoin has shown that Bitcoin might be the best form of, well, stable money, might be the best money ever invented. But what's happening now in 25, and I think this is very important to understand, we see a huge shift in the core of the financial system, let's say on Wall Street. One example, Morgan Stanley is advising their clients now to quit the normal 60-40 portfolio, which means 60% in equity, 40% in bonds. And they officially advise people now to go to 60-20-20. The last 20 is physical gold. They haven't added Bitcoin yet, but you can expect the US government, the Trump administration, to introduce Bitcoin to the, well, US official financial reserves, maybe. So this year is a watershed moment. 25 is a watershed moment. We are experiencing the end game of the financial system centered around the dollar, as has been built since Bretton Woods. And this is, I know the Bitcoiners aren't that happy because this year Bitcoin isn't the fastest horse in the race. But I wouldn't be surprised when Bitcoin will start a new rally quite soon, because we have this flow out of paper assets to hard assets, alternative assets. Sorry for the long answer.
No, it's great background and insight, Matthew. I know you do a lot of macroeconomic work, studying the inflows of different asset classes. What are you seeing right now with gold inflows compared to Bitcoin inflows, and their relative size?
Yeah, I mean, just bringing it to the present, I'm curious what you guys think as well, because 5 years ago, my old co-host and I, Fernando from Brazil, we interviewed Mark Faber, famous gold bug, Western bear, Asian bull. He was just so angry that gold was not going. He's like, all these flows are going into crypto. He's using the word crypto, of course. And everybody's just so angry in the gold market just 5 years ago. Now it's funny, a little bit see that now with the Bitcoiners. Wondering, gold's just, gold and AI over the last 2 years, if you track like the top US tech companies, are growing at 41% per year over the last 2 years on a trend. And that's exactly what Bitcoin does on a power curve. But Bitcoin slows down a little bit. So I'm curious, what you guys think if that's going to balance back out. Just funny numbers. I think a lot of people have probably heard about the power curve. It's about 125K is what the curve will be by year end. Bitcoin follows this very, very closely. But Bitcoin also follows a power curve in gold terms. And so in gold terms, it would be 65 ounces of gold would be the trend, 97% R squared of Bitcoin. And the actual price today is 24 ounces of gold. And that's about the 20th percentile. If it gets down to like the 20 ounce range, that is super cheap statistically compared to the life that we've had with Bitcoin and gold. And then you tack onto that the fact that even when we had this big puke in 2022, SBF, everybody goes bankrupt, realize nobody has any money, they're over-levered in the crypto industry. Gold at that time was 9 ounces of gold per Bitcoin, Bitcoin priced in gold. So Bitcoin actually is growing even in terms of gold, but right now gold is really, I think, stealing the show. And I'm curious, what you guys think about that.
Well, to avoid being angry and sad, you just own both, right? Last year I was on stage, I said they're friends and not foes. And I've never been a maxi. I went from gold to Bitcoin and back to gold, but I also always own both because I like them both. I think they're complementary. Bitcoin, like Willem said, may be the more perfect form of money, even though perfection doesn't exist. But gold has the reputation and history. If you look at central bankers, in 2024, 15% said they would possibly buy Bitcoin over the next 5 to 10 years. That percentage went down to 2% in the same survey last year. If you survey them and ask about gold, they basically all say we're going to increase our reserves. So knowing what central banks are doing, and especially BRICs nations, you know that for the next few years, gold will probably be amazing. So why not own it? If you know, or if you can basically calculate that it's going to have a good ride, just don't. You're basically you're shooting yourself in the foot by not owning it. So just own both. You'll sleep better at night, and you won't be as grumpy as some of these maxis.
And if I can add something to Paul's comments, the reason central bankers aren't adding Bitcoin to central bank reserves is the fact that they can never control Bitcoin. They can control gold because central bankers have always had gold in their reserves. So central bankers, if they join forces worldwide, can always decide what will happen to the price of gold. They can sell it, they can buy it, they can revalue it. They can't do this with Bitcoin because they don't own it. So because they can't control Bitcoin, they will never use Bitcoin voluntarily.
Yeah, I mean, who cares about the central bankers? They're going to do their own thing. We're Bitcoiners. We're in full control of our wealth for a reason. When I kind of zoom out, though, Willem, and I'm looking at the macroeconomic landscape, I am really kind of seeing this return to real hard assets. I think the cat's out of the bag. Paul, you're saying it's like these central banks, they want to own hard assets. Specifically being gold. We're seeing the U.S. like a big repatriation of gold. So when you're helping your clients form a portfolio, how are gold and Bitcoin kind of working in tandem to kind of guard against like this fiat money threat?
Well, I started the Commodity Discovery Fund in 2008. We invest in listed companies who are active in the world of commodities. I had years of discussions with our own board and investors to be able to add Bitcoin to our portfolio. We have around 5% of Bitcoin positions in our portfolio now, because I do regard it as digital gold. It should be in a broader portfolio, because Bitcoin and gold have different cycles. So when you put Bitcoin and gold in a portfolio, it stabilizes the portfolio because the cycles are different. And this year is a great example. For me, I think for us as, let's say, the smart money, you see more and more of the smart money incorporated Bitcoin in their strategies. But as said, central banks and governments do still have a major issue with Bitcoin because they can't control it. But I'm very curious what the Trump administration will do in the next few months on Bitcoin and crypto.
And in general, I would like to add that the older you get, the more conservative you want to run your portfolio. And so for me, it makes sense, the older I get, that I reduce my crypto holdings and mostly my Bitcoins holding a little bit, and build up real estate, gold, to have a more conservative portfolio. But when you're young, just invest as much as you can in your own company, in your own skills, health, and you can be also more adventurous when it comes to crypto or Bitcoin. So my advice is, the older you get, be more careful. But in my view, they both deserve a place in anyone's portfolio. And I would just get rid of all the bonds and treasuries, as little as possible in your bank account, and put them in hard assets as much as you can.
Yeah, I can just add a little bit as well. If you think about, a lot of people want to talk about, are we early, are we late, or, obviously we're not super early anymore, but it really depends on your perspective, because if you look at this from a production, like a mining production value, gold is definitely having its day in the sun. It's about 100 million ounces of gold that's mined a year, and that's getting close right now at $4,000 an ounce over trailing 12 months, getting close to $400 billion industry. And so there's going to be a lot of people catching up to this. There's going to be a lot of good projects, maybe projects that weren't profitable before. Now they are profitable. Maybe some jokers are coming in. But regardless, there's a huge interest in the gold industry right now. And if you think about that compared to Bitcoin, if you take the mining industry and fees in Bitcoin and you sold it, miners don't do this, but if you sold it every day at the price it was over trailing 12 months, the Bitcoin industry at the moment is less than 20 billion. It's about 17 billion, which is actually the high from 2022. So it's super low relative to gold. In the oil markets, just for an example, that's a $2 trillion market is the oil industry. So I try to put that in perspective as well. I think I totally agree. I mean, if you're younger, you certainly want to go all in. I mean, not all in, but never financial advice, but you want to expose yourself more to Bitcoin. But it's still compared to all the other industries, to me, it still seems like a very good opportunity.
Yeah, it's certainly not financial advice, educational purposes only for any NARC regulators in the room. That's something we're really focused on with our clients too, Paul. It's like we want to focus our portfolio on real world hard assets. And one of my favorite sayings in finance is concentration is how you get wealthy. Diversification is how you maintain your wealth. But you guys have talked about some of the geopolitical tailwinds. Gold is kind of commonly referred to as like a political metal. So if it's historically has taken the reign as like the sovereign neutral store of value. You were talking about the Trump administration obviously being a little bit more crypto friendly and kind of leading I would say the world in that front. If Bitcoin kind of takes that place, how do we think the geopolitics affect Bitcoin and its ultimate value as that sovereign store of value?
Well, when I talk to my Chinese contacts, I more and more get the picture that we're looking at some sort of a bifurcation of the system where the West is using stablecoins, crypto, Bitcoin as a sort of a conduit to soak up treasuries and dollars and liquidity. And in the East, BRICs. I mean, if you look at what the Russians say about stablecoins, for example, or if you look at what the Chinese are doing, they're making Bitcoin illegal and motivating their citizens to buy gold. So maybe at some point you're looking at a sort of a split between a Western crypto space versus a Eastern commodity-based system. I mean, I'm fine with both, of course, from a business point of view, but I think it's interesting to see how the world is going to develop and if we are going to see this sort of deglobalization where two different systems are going to coexist, one based on crypto, the other with precious metals as collateral. For example, in India, people can now use silver as collateral at their bank in order to stimulate lending. And in China, insurance companies are now allowed or actually motivated and incentivized to own gold. And in Europe, that's a no-go. So let's see how things go. But I would definitely keep an eye on what's going on in China, India, Russia, because we sometimes focus too much on what's happening in the US and Europe when it comes to crypto. But that would be my advice. Also look at the other side and what they're doing and how they perceive crypto and precious metals.
I agree with Paul's stance because the US has been weaponizing the dollar over the last few decades, especially in the last few years, especially since the start of the Ukraine war. But in reaction, countries like Russia and China are now starting to weaponize gold and silver, using it as a financial weapon of almost mass destruction, because they do understand that gold and silver are the Achilles heel of this dollar-centered system. The US dollar was backed by gold till 71, and after the dollar broke away from the gold standard, gold became the enemy number one for the US financial system. So central bankers have been working very hard to manage and suppress the price of gold. And that's why the subtitle of the Big Reset was the War on Gold and the Financial Endgame. And China and Russia understand this very well, are fighting the US now with gold and silver. And Bitcoin isn't part of that geopolitical fight yet.
What do you think, Matthew?
About well, I mean, I think that Bitcoin, the supreme collateral that Bitcoin is still a little bit ahead of gold. I mean, I have no problem with gold, but obviously the Bitcoin conference, and we all are pretty, fond of Bitcoin for obvious reasons. So yeah, I'm curious what you guys think, because I think that we saw what happened in Europe. The biggest thing that made the U.S. The center of the gold standard was Hitler and Stalin. I mean, by the first year of World War II, 80% of all the central bank gold was in North America. So it seems like from the side of a central bank position, like also this, like I said, 42% a year growth for gold last 2 years. Central bank buying is the same, like 1.5% per year. It hasn't I don't necessarily see where that I understand some of the reasons, but central banks don't seem to be driving that price. So I don't know. Yeah, I'm curious if you guys think that could really anchor them more, or will they have to embrace Bitcoin?
What I like about Bitcoin is the decentralized nature of things. So Bitcoin as collateral is amazing, because if we would set up a transaction like that, we can do it without anyone else trying to intervene. And with gold, of course, you're still depending on someone else's vault. Like India, for example, is getting most of their gold back on their own soil. And I get it, because then they can protect the gold. But if you then want to use it as collateral, it becomes more difficult. So, for example, China is using the Shanghai Gold Exchange as a new backbone for a gold-backed financial system. But then you have to rely on China. For example, Cambodia is now storing gold also using the Shanghai Gold Exchange. But then Cambodia is depending on China. And like Venezuela, for example, they tried to retrieve their gold from London, and then London said no. So that's definitely a disadvantage of gold that Bitcoin solves. So I agree with you that from a theoretical point of view, Bitcoin is maybe a better type of collateral. But at the same time, we have to deal with realities. And in reality, I see gold being used as a backbone for BRICs and silver as well. But I'm a big fan of Bitcoin, so I'd love to see the other scenario play out as well. I mean, in that sense, I'm agnostic. And so again, I have to repeat myself, just bet on several horses and you won't be grumpy. And I can do this conference again and again and again. So let's just see what's going to happen. But I think you're right that Bitcoin has this advantage of being decentralized and therefore less prone to confiscation, intervention, whatever.
We have this huge fight between China, Russia, and the West now, but we shouldn't forget that it doesn't matter if you are in the White House in Washington or you're Putin and living in Russia, or Xi trying to manage China. They all have in common that they want to stay in control. And the guys who have the power want to stay in control. They make the laws and they can decide whether you are allowed to invest in Bitcoin or in gold. And they all have this common theme that they want to stay in control. And what scares them most is that they lose control and people start to riot in the street and will start a revolution, because look what happened in 1917 in Russia. So governments worldwide will do everything to keep the system stable. And I'm always a bit worried what the Bitcoiners are wishing for. Sometimes I get the feeling that some of the Bitcoiners want it all to collapse and then Bitcoin can take over. But be careful what you wish for. And the guys with the power, the guys who own the guns, won't let you succeed.
Yeah, I'm of the belief that Bitcoin's super feature is allowing its users to natively take custody of a digital bearer asset. And that's very important for not only, I think, the future of humanity, but the future of Bitcoin and Bitcoin adoption, because it really does give, I think, power to the users. And we're seeing that decision-making kind of restored to the base level and the individual holders, as opposed to these centralized power structures. I do think, to all you guys' points, that these central authorities are threatened by sound money. So in our final minutes here, how do we feel that sound money can raise all boats? Is that tide that lifts all boats? And we'll end on a high note here.
Well, I think in the end, in order to have sound money, you really have to first convince everyone that it's in their best interest to adopt a hard standard. And unfortunately, with politicians, of course, being the worst offenders, people still think that that money should be used in order to stimulate wealth and as long as, so it starts with education. And of course, an event like this helps, but I would love to see in schools across the world that there would be more focus on Austrian school economics and the benefits of sound money. Because if we don't teach people the benefits of it, I think we will be stuck with elastic money, fiat money for many decades to come.
Yeah, no, I agree. I mean, not to get too political, I live in Latvia. I have my European hat on now at the European Bitcoin conference. And, we are very close to Russia. They have this war. And I think Russia is still suffering from 100 years of communism, which they started. They still haven't got over that. China is definitely a great country to trade with, but the U.S. is approaching them now with much more caution. So I think that if you look at gold versus Bitcoin, obviously it's a great safe answer to say go for both. I think that we should absolutely do. There's a lot of funds now where they're 100% gold, 100% Bitcoin. But I do think that at the end of the day, if there's a way where you can protect your money on a multi-jurisdictional level, you can do multi-sig across state borders. I talk about that even, I'm not even that much of a public figure, but multi-sig is one of the best Bitcoin inventions. There's so many things down the rabbit hole with Bitcoin that you can do that I think at an individual level, it really empowers all of us. And plus, it's a really great return at the moment. So, without being too verbose, I guess that's enough.
Well, for private investors, it's quite clear that adding Bitcoin is very beneficial. But for me, the main theme and the main question is what governments will start to do now. Because if the Trump administration is serious on its Genius Act and is serious about introducing and backing all these stable coins, and look how they treat Tether now, and then you could have a huge shift from a sovereign like the US starting to roll out its crypto strategy, adding Bitcoin to their financial reserves. And once the US will start doing that, other countries will follow. And then the fiat system can become quite unstable, because then the flight from paper assets to hard assets has been upgraded to the sovereign level. And that's actually very scary. So I think the next 12 to 24 months will be the most exciting, but also the most dangerous one since 2008, since the Lehman crisis, because we're on the verge of a new financial crisis around sovereign bonds, around treasuries, because Japan has a huge problem on the fiscal side. UK has a huge problem. The EU has a huge problem, and the US as well. And this will be the fight of our lives. What will happen in the next few years? Educate yourself, because there are lots of moving parts, and it can become very serious very, very soon.
Thank you, gentlemen.